If you've been following me for any amount of time, you know we talk about Uniswap v3. We talk about how yield farming via concentrated liquidity is possibly the best passive income opportunity in the history of mankind, because everyday people like you and I can be market makers versus it just being a thing that major banks and institutions can do. So in this video, we're going to be talking with Jake Call on a tool that he created called Buildr Metrics. And Buildr Metrics is a tool that you use before you deploy into a farm. So he's going to walk through the platform, how to use it, how he goes through looking at what pools he wants to enter, but using this tool first so that he can know the speculated yield and all the metrics that he needs to know before he hops in a pool. He's also going to talk about what features they have planned in the future, as well as how it compares to its competitor in DeFi Labs. So this is a video you won't want to miss. If you like this kind of content, we ask that you please consider subscribing, like, comment, all of that stuff, share with a friend. Without further ado, let's get into the interview with Jake.
Hey man, how's it going?
Yo, what's going on, Jake? How you doing, man?
Nothing much. Doing pretty good. We got calls all day, so.
Same here. Good problems to have, man. Good problems to have.
Exactly.
So, before we get into Buildr Metrics and, all that stuff, like, would you mind telling the audience, like, how you got into crypto and then specifically DeFi?
Yeah, so I got into crypto with like meme coins, specifically Dogecoin. I was buying some Dogecoin, I want to say when I was like 16 at like 0.000 whatever amount. And I like 2x'd and then I lost the money because it went back down to my like initial entry price. So I just sold for like a break even. And if I would have held it, I would have had like, I want to say 70 grand at peak price. But yeah, it is what it is. First crypto interaction.
Hindsight 2020.
Exactly. Well, I guess that was one of my first crypto interactions. I had bought some crypto when I was like 13 years old, and invested in some Bitcoin, mining program that ended up being a scam, lost that money. But then eventually, like, I got into Shiba Inu, made videos on SHIB for a long time. I want to say I was pumping out like 2 videos a day, 3 videos a day sometimes for like a good few months straight. And then I kind of got off that and started to get into DeFi back in end of 2021. So right as that bull market was kind of coming to a close, and got into some platforms like PancakeSwap, got into some platforms like Ring, which was one of the big scams back there, and Forks, all that good stuff. Yeah, made some money, lost some money, came out on top at the end. But eventually, like halfway through 2022, I decided I wanted to transition more into like real yield stuff and stuff that was more sustainable, less risky, and had a long-term potential, as opposed to just short-lived schemes that die out after a month, right? So that's when I kind of got into like Uniswap v3, concentrated liquidity, and kind of all throughout, I guess, my journey, I was providing liquidity as well, so it kind of aligned with that.
Hell yeah, man. No, I appreciate that. So you got into crypto and DeFi through SHIB, and then you built this tool called Buildr Metrics, which it's basically a way to like, scope out the yield you can get on a pool before diving in. So if you want to like tell the audience, like, what exactly is Buildr Metrics? Like, how would you describe it? And what problems or problem are you guys aiming to solve?
Yeah, so Buildr Metrics is a Uniswap v3 simulator. And right now I want to put emphasis on Uniswap because we are going to branch it out to other decentralized exchanges in the future. It's just at the moment, Uniswap is what I mainly use. It's where, the most amount of liquidity is, and it's the largest decentralized exchange. It pretty much founded concentrated liquidity. So I think it's good to have it for that to start with. But with that being said, the problem that we're trying to solve is that, a lot of liquidity providers don't necessarily know what type of yield they're going to get before they enter a pool. They'll enter, say, Ethereum to USDC, and they'll just go full range, or they might go with the range of like, 1,100 to like 1,900 per Ethereum, with the current price being, say 1,500. But they don't actually know what type of return they could get, which is, in my opinion, a big problem. It's like you're diving into something and you don't even know the data behind it. It's like purchasing a house, not knowing how much money you're going to pay per month for it. It's not logical. So to have a platform like Buildr Metrics where you can actually estimate those yields, enter in your range, compare it to full range, see how your position is going to perform over time, and actually be able to do that with ease, I think is a necessity for like a DeFi platform.
Okay. So when you say like see how your farm is going to perform over time, is it using like the previous 30 days worth of data, or like how is it extrapolating? Because
Yes.
obviously the future's not guaranteed. So how does it like go about doing that?
Yeah, so there's a few different things that it factors in. The number one thing it factors in is current TVL and liquidity distribution. So how liquidity is distributed across different prices of the pool. A lot of the times what you will see is there's a lot of liquidity on current price points, but only some liquidity on those outlier price points. So ultimately, if the majority of the liquidity is concentrated, even if you have a somewhat tight range, if you're not as tight as the other people, then that's going to cause issues and you're going to have a lower yield, right? So with that being said, we also factor in, whatever amount of data at a max of 365. And I say whatever amount because you can actually change the amount that it factors in. And that's something that we call calculation range. You can put in anywhere from 1 day to 365 days, and it will use that amount of data to determine, potential yield in the future.
Okay, that makes sense. Yeah, my next question was like, why is it smart to be able to stimulate positions before entering them? But you kind of answered that already. Yeah, house analogy. Like you want to know your mortgage before you buy the house.
Exactly.
Or whatever your rent payment is. So I guess the next step would be, a nice walkthrough of the platform. So we love if you can share your screen and show like, okay, you want to get into this pool, but you want to, look at your key metrics before deciding, just to kind of give people a live feel.
Yeah, definitely. All right. So essentially you have two options when you land on the homepage. You can either calculate an existing pair, or you can go and you can look at the top pools. So top pools we'll talk about first, but basically this will show you some metrics behind some of the different pools on the network that you select. So in this case, we'll use just Ethereum mainnet. And you can also favorite some of these pools, so that way you can reference them later on and it's just stored in your cookies. But basically over here, you have estimated fees 24 hours. This is simply based on the amount of the amount of fees collected in the past 24 hours divided by the overall TVL of the pool. And on top of that, it just, gives you this estimate. This is going to factor in once you go and you calculate your range and you determine all that good stuff, right? You also have a little risk level. And if you hover over that, it will factor in a few different things like the pool TVL, the pool volume, the price volatility, token TVL of USDC, ETH, or whatever tokens in this example, as well as the overall pool count to see how many different pools there are for USDC or for ETH to make sure that it's somewhat liquid, if that makes sense. Right. Now, going a little further, you also have a little chart that goes over the 24-hour volatility, which is just simply based on this equation, 14-day average of the high minus the low divided by the high. It's a pretty common equation in, I believe, the traditional finance space. Another thing is when you go and you look at the pool, we'll show some of these metrics on the top info part of it. But with that being said, I want to, find a pair right here. So I'll usually sort by 24-hour fees. I like to look for some high yield stuff, because if I'm going for a blue chip asset, I already have that asset in mind. So there's no reason to go look at top pools, right? But if I'm looking for just high yield pools that I can kind of hop in, hop out, I'll go and I'll sort by 24-hour fees. And then, this Pepe to ETH one looks pretty decent. Shows that there's a TVL of $10.5 million on Pepe and a TVL of $1 billion on ETH. We go further and we can actually look at the pool TVL, which is about 4 mil. There's about $121 in fees. So this is something that I like to keep in mind, right? There's $4 million in TVL in this pool, but there's $120 in fees, right? That's a very little amount of fees to split across a big amount of TVL. So that's already going to be like kind of a red flag. I'm going to go look for a different pool, right?
And while you're doing that, I want to ask you a quick question. So you mentioned that you basically have an asset in your mind, and I do the same thing. I just want to know how you think about it. You have an asset in your mind, and you're like, okay, I want to get a yield on this asset, maybe so I can sell it at my price target once the price appreciates. Now, when I ask this question, I want to know your methodology as to why. Because sometimes I'll flip-flop. Would you rather get into a pool and get yield on the asset, or would you rather like get into the best pool and take the rewards and buy that asset, if that makes sense?
That's a good question. So I've done a little bit of both, right? With risky pools, I don't like to compound. And with even semi-risky pools, I don't like to compound either. But what I will do is I will compound it back into my portfolio. So I can kind of create something that I call a buffer. Like, for example, I just found this Ox pool by looking at the 24-hour fees. And, I know some people that are doing pretty well with this Ox pool. So I'll hit calculate on it, right? And already off the bat, we're going to get a pretty good yield. Like if we just use, the min price and the max price of this correlation chart, right? It's showing about 238% annually. So with that being said, what I can do is I can take this 238% annually and sell it into stable coins or sell it into some asset that doesn't have exposure to this specific asset. That way I create a buffer. So if worst case scenario, this pool does drop, say, 20, 50%, I have my buffer. And since I didn't compound the fees that I earned, my assets aren't falling a drastic amount. I'm building up that capital. So that way I can play with house money eventually.
Right. Okay. That makes sense.
Yeah. So now that we're on this, Ox to Ethereum pool, I'll just kind of show you how I find my range. I like to look at things a little bit technical, but I also like to include fundamentals. Like, for example, Ox, or this pair in specific, is relatively volatile. It's showing a volatility ratio of about 13.6%. Anything above 10% is going to be pretty volatile, right? It's also showing a ratio of volume to TVL. This is taking the average daily volume and dividing it by the current TVL. So in this case scenario, we have really good volume compared to the TVL. It's a 43% ratio. Now, granted, on pairs like Ethereum to USDC, you're going to have an even better ratio, but those are blue chip assets. For risky assets, something like this is pretty good in my opinion. You also have the fees up here.
For the better, basically.
Yes, exactly.
Okay.
Yeah, because more volume is obviously going to be more fees that you're collecting to make up for the risk that you're taking on. Now, you also have average fees in the past 24 hours, and this is all based off your calculation range. So if we adjust this, you'll see those numbers change. So if we go to 107 days, which the pool's been open for 107 days, it'll find the average 24-hour fees over the past 107 days. Whereas if we put it at 43 days, it'll find the average 24-hour fees over the past 43 days. And ultimately, these are the same numbers that go into this monthly and yearly calculation right here.
Okay. And when you say that, I kind of got a feeling that what you're going to answer, but just to make it clear for people, when you say you look at the technicals, which is what you just showed, but you also look at the fundamentals. An example of looking at the fundamentals and kind of adjusting your strategy would be probably let's say you're bullish on Ox and you think it's going to outperform ETH in the next 40 days. Instead of looking at the last 40 days, you'll probably make your range a little bit higher so you can kind of take profits into ETH. Is that what you were? Okay.
Exactly. So yeah, I mean, obviously you're going to have impermanent loss in liquidity pools. So as the price of this chart is moving down, that essentially means that Ox is outperforming ETH. So if I'm ultimately more bullish on Ox and I'm more on ETH, I think Ox has more room to grow and it's going to outperform in the long term. The reason why I might do that is just because Ox is lower market cap asset and Ethereum is not going to go 10x in the next year or 2 years, right? Maybe, 3 to 4x or something like that. But Ox definitely has the potential to go 10, 20, 30x. So I'd want to add room for Ox to do that, And at the same time, I want to judge the volatility. In this case, we have a lot of volatility, so I'm not going to want to go at a range like this because ultimately, if price jumps just like that, I'm going to be full shifted into, say, Ox if it takes, a hit, and then I'm going to have a ton of Ox that is constantly declining if Ox continues to go down. Now, granted, the trade-off is with that tight range, you're getting a much higher yield. With that being said, we also have some other metrics down here that kind of go over, position breakdown by token value, asset value, and TVL history and volume history. But I'll talk about those after you go.
Okay. So in addition to what you just went over, do you have okay, these are the boxes I need to check when I'm looking at Buildr Metrics that was going to say, hey, either I need all these boxes checked or some of these boxes checked in order for me to feel comfortable entering this pool? Is there a systematic methodology that you go through, or is it kind of just dependent upon, whatever, I guess?
Yeah, I mean, it's a little bit of both. At the end of the day, I'm not crazy, picky, okay, I need this. If it doesn't hit this number, I'm not doing it whatsoever. But at the same time, I'm not just going to go hop into this pool not knowing anything about it. I'm going to go do more research on what Ox is. I'm going to make sure that I have conviction in both assets. And a big thing for me with my analysis is utility. I want to make sure there's a reason for people to hold Ox, and I want to make sure that it benefits it. And I also want to make sure there's not going to be a ton that are put in circulation over the foreseeable future. You know what I mean? I don't want it to, inflate 10, 15, 20% in the next few months, right? Because ultimately that will cause it to drop in price, which will affect my pool. So in this case, I know Ox does have some utility within the open exchange platform. That's token that it's native to. They have like staking for it and whatnot. And, you can get fee rebates on your trading when you use stake Ox, and you can also earn a yield just by staking Ox, and it's a real yield. And one other thing is it is inflationary. So I wouldn't want to be in this for a long period of time. I'd want to get in, get my yield, and then get out. Right.
Got you. Makes sense, man. So when I look at this platform, I see a lot of similarities with DeFi Labs. I'm sure you probably use that tool. Did you want to talk about how your Buildr Metrics tool is superior to DeFi Labs? Like, why should people use this one over DeFi Labs?
Yeah, so Buildr Metrics is a lot more easier to use, I'll say. And both have their pros, both have their cons. I do know that DeFi Labs does have some more advanced data points, and they'll show you some more different features, and you can do like comparisons, like where you can pretty much have, pool 1 on one side, pool 2 on the other side, and you can compare performance and like back test and stuff like that, which is really nice. But the other thing about Buildr Metrics is we're meant to be for somebody that just wants to quickly look at how this pool is going to perform, look at some different metrics, and not go into an in-depth mathematical technical analysis. Like when I'm looking at, say, hedging, personally, I will use DeFi Labs on occasion. But when I'm like, just looking for a good performing pool and looking to explore new options, I'll go and I'll use Buildr Metrics.
Got you. So it's something that you can use in tandem. Like it depending on what you're doing, you use one or the other, or maybe sometimes both.
Yeah, exactly. And I will say, obviously I do have a biased opinion, but I do think that Buildr Metrics is tailored to most liquidity providers. Now, if you're more at an advanced liquidity provider, then, DeFi Lab might be a little bit more tailored to you, just because, it's a little bit harder for a beginner to understand the different features about DeFi Labs.
Sweet, man. So my next question is, so you built this platform, it's working great. What do you guys have in the kitchen? I know you said you guys are going to build it out for different dexes, probably go on different chains. Do you guys have any features that you guys are cooking up in the kitchen that'll be released that you feel comfortable talking about?
Yeah, so we initially launched with just very base level product. It lets you see, min price, max price, estimated fees, distribution correlation. Very, very basic, right? And then we decided that we wanted to go a little bit further before we start branching off to other decentralized exchanges. So we decided to implement, different metrics like this, current TVL, volume, calculation range. We also implemented different charts like position breakdown by value and token, asset value over different prices, as well as TVL and volume history. Now, in the future, what we're going to implement is more data points. So there's a few other things that we're going to be, implementing, a few other charts. There's also some stuff with hedging that we're going to implement. There's some stuff with other decentralized exchanges that we're working on. We have a few, hopefully, partnerships underway to support those exchanges. And we also already have, partners with Aperture and Crystal, which help you automate or track, your Uniswap v3 LPs.
Okay. Sweet, man. So I see you got the Aperture button there.
Yeah.
Is it possible for you to like let's say you're like, okay, I want to look at this ETHUSDC pool, and then you put in the parameters, and let's say over the past 40 days, maybe you can get a 25% yield within this range. Does that button allow you to click Aperture and already pulls up those metrics that you already input, or do you still have to kind of like input them in?
Yeah, so that's something that we're working on. If you pull up Aperture, you're going to have to, it just pulls it up to the website, right?
Gotcha.
But at the same time, right now, I believe it's somewhat limited with Aperture, and the reason why is because they have whitelisted tokens, right? So ultimately, if you were to go over to our tool and click create position and just say, this helps you determine how much of each asset you need, and you hit create position on Uniswap v3, it'll pull it up with the contract address in the URL, right? And it'll pull it up with the min and the max price, and you can just boom, go ahead and enter your pool just like that. Everything's already pre-filled. Whereas with Aperture, we're working on doing the same thing. It's just going to have to be once Aperture is out of its kind of beta phase, and once they support, any pool that you want supported, or not any pool you want supported, but they support every pool.
Guys, we both made our own individual videos on Aperture, so maybe check both of them out and leave in the comments which one you guys think is better.
Let us know. And then, ultimately, we also want to implement kind of our own tracking side of things where, you could track directly through Buildr Metrics, and you can also, manage your positions directly through Buildr Metrics. But that's more of a long-term thing, you know, like
Hell yeah.
we'd be looking to use, I guess, Aperture on our front end, if that makes sense, you know?
Makes sense. Yeah, the more data and plugins you got, the better, man. That's
Exactly.
I love to hear it, because you know we need to onboard more people into this space so that we can have more liquidity and more yields.
Yeah, definitely.
Yeah, man. So that's pretty much all the questions I had. Did you have any final thoughts? Maybe something I didn't cover that you wanted to share or walk through?
Not that I can really think of, other than the fact that we're starting to post some blog posts. We're gonna have a big button that says blog on, you know, Buildr Metrics. So if people want to learn more about some different DeFi strategies or maybe some different trending pools and stuff like that, they could check that out. We're thinking about sending out like weekly posts that go over, you know, top pools of the week and stuff for people to look into. And then I recommend people follow us on Twitter, Buildr Metrics, you know, without the E on Buildr, and we post a lot of updates over there.
Yeah, that was my next question. How can people find you? I know you have you just mentioned the Twitter. I believe you have 2 YouTube channels, I think. Is there like a recommended one that you have people follow?
Yeah, so I have a YouTube channel. It's called Jake Crypto. It's simply youtube.com/Jake Crypto. And that's my main one. That's where I post all about DeFi. I post, you know, different liquidity pools and other content like that. I also have a Buildr Metrics YouTube channel. We have a Buildr Wealth YouTube channel. So there's just a lot of different pages. But if you go over to buildrmetrics.com, you know, within the next 1 week, you'll see like a list of all of our social medias down here where you can see all that information.
Hell yeah. Well, Jake, I appreciate the time, man. I love what you guys are doing. As you guys, you know, ship more updates that you want to get more eyes on, you know, let's hop on here and do another video. So I appreciate you jumping on, man.
Yeah, definitely. Thanks for having me.
No problem, man.